Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at SPY, S&P 500 ETF, Dow Jones Industrial Average, natural gas, and oil. Okay, so let's look at SPY here, SPY. It did form a doji on Friday here. You can see the doji candlestick down here. The open and close were just about equal, and that did form the bullish doji star reversal pattern. So when you have a downtrend and then you have a gap down open followed by a doji forming into the day, that signals the indecision and a possible technical bounce. And so this pattern would be stronger if it did form below the lower Bollinger Band. The lower Bollinger Band is down here, the purple line. It's lined up right now with the 400-day simple moving average at 261.33. So that's the next major and last major moving average support level. If it fails to bounce in this 263 zone, look at 261 is the next support level. Yeah, and then you have 260 just below that, which was the May low. May low close was just above 260 there. And so this 260 to 261 support zone should be a good level for a technical bounce if it does pull back and test that zone. Now with the doji, it signals a possible bounce, and in order for the SPY to head higher, it has to break this pink line. That's EMA4 at 265.59. Now once it's back above that level, similar to right here when it was trading below the pink line, and then it closed back above right here, and then it held the pink line and ran higher. That's what you're looking for now. That's going to be the first big step. If it keeps failing to break that level, that is going to signal more downside risk. Okay, let's take a look at Dow Jones Industrial Average. So the Dow Jones Industrial Average is at very oversold levels on Fasto right now. As you can see down here, it's at 0.86, and so this is historically a level that it tends to get a technical bounce off of. Now, if you look at RSI at 34.82, it is hitting the level that it bounced off of back here in June. The June low is very similar right now on RSI and Fasto. Now it may take a drop, because this is a pretty big deal right now in the market, below 30 on Dow Jones in order to get that really good technical bounce. I think that's what a lot of traders are looking for. Below 30 was like this move right here, and then it bounced, and then it did continue lower. So the bottom line is the market is oversold on Fasto for the Dow, but it isn't at those at that 30 oversold level on RSI. So that does signal that they could push it lower. Okay. There are 4 red candles in a row, and there was a gap down open on Friday. It did not form a bullish pattern like SPY. This is just a red candle. If you look at the lower wick on October 29th, the October 29th low is lined up right now with the lower Bollinger Band at 24112. That is also lined up with the low close from back in June. So what I would look for next week is a technical bounce off of the 24,100 support zone. Now, if there is a close below this green line here, and it closes below that 24,112 level, that's going to be a major red flag and signal that the market could actually keep pushing lower. Now, if it hits this level, what you're looking for is a technical bounce back to EMA4 at 24557, and as long as that level fails to break, that will be the sell zone on the bounce. As you can see, it bounces back, it hits the pink line, and it keeps heading lower. And so until it turns into support, it's going to signal downside risk. Once above, you have the 300-day simple moving average that has now turned into resistance at 24755. If that remains resistance, the Dow Jones Industrial Average is heading lower. It is currently as bearish as you can get on the chart, on the daily chart here. It's trading below every single moving average, riding EMA4 resistance lower. That is not good. Okay, that signals that we are in a very strong bearish downtrend right now. If the candles keep riding below the moving averages, that will signal more downside risk for the market. So watch that 24,112 level next week. That is going to be the major support level to hold. Now, if we look at the Dow Jones Industrial Average on the weekly chart, you can see it's hitting the bounce level from back here in October, okay, on RSI. But RSI up here at 4150, I mean, it has a long ways to go until 30. So yeah, if you could see here when the market was super bullish, it was pushing above 90. I mean, we haven't even come close to being oversold on RSI and the weekly chart. So that does signal that they could take this market lower. And so yeah, if you look here at Fasto, it's at 5.79. So it closed at extreme oversold levels last week. That was the lowest weekly close on Fasto on the weekly chart for the Dow Jones Industrial Average in years. Okay, it hadn't closed that low in the whole year of 2017 or the whole year of 2018. So this is the most bearish that it's looked on Fasto, and even on RSI. That's the lowest close on RSI as well in years. So this is really bad for the stock market. Okay, you want to look at the longer term charts to get a better idea of the direction, the overall trend. It gives you a better look than that daily chart of really what's going on. And as you can see here, the green line is below the black and the red lines on ADX. That's a clear signal that the bears are in control. Right now, the Dow Jones Industrial Average is in a downtrend on the weekly chart. That weekly close in November below the middle Bollinger Band, that was a red flag. And then last week, the huge level broke. There was a weekly close below the 50-week moving average at 25129. Okay, so that last time it closed below that level was in October, and it quickly got back above and headed higher. Well, if that 50-week moving average turns into resistance, as you can see here, you're going to have to go back years to find when it has become resistance. That is, if you needed a clear signal of the direction of the market right now, that's it right there. If we stay below 25129 for an extended period of time, we're heading down here to this 100 week moving average at 23344. If things do not go well with Z and Trump next weekend, we're looking at a drop down here to 23.344. Right now, last week, there was a close below the lower Bollinger Band on the weekly chart. That's the first weekly close below the lower Bollinger Band in years, okay? So it is at that level where it should be able to get a technical bounce. It's just, are we going to rally heading into like the biggest unknown of the entire year? I mean, everything is hinging on, everything is riding on Trump and Z having some kind of positive outcome. What if Trump keeps playing hardball and there is no positive outcome? That would be destructive for the market. It would be brutalized. Now, there's likely to be some kind of compromise now with the market losing all of its gains for 2018, for the implications of possible not being reelected in 2020 if the market goes into a major bear market. So it seems like it would be favorable to have a positive outcome next weekend, but we can't bank on that. You can't count on that happening. If things do not go well next weekend, it's going to get even uglier. And so that's why I think it's going to be hard for people to get too bullish this next week with so much uncertainty ahead next weekend. Okay, so let's look what happened Black Friday. It was the worst Black Friday in 34 years. For 33 years in a row, if you bought the retail sector before Black Friday, it went up. Well, that didn't happen this last week. Black Friday was a bust. And so that's a major red flag. Is the Santa Claus rally going to happen this year? You can't bank on it. Okay, this could be this all could be the start of a major correction for the stock market. If things do go good and Trump pulls the good deal and everything goes favorable, then we could rocket. That would be major rocket fuel. That's what we need for a good Christmas, is for a positive outcome next weekend. Well, natural gas has been the play. That's where the money's been at, is trading natural gas. It had that historic run. Let's take a look at the daily chart here. It's trying to break down. Okay, so it's losing steam right now, and it's been making a series of higher or lower highs. So you can see there's a high here. Okay, then you have a lower high and a lower high, and so it keeps making these lower highs on the bounces, and so that's signaling that it's cooling down. Okay, so this was a climax spike right here. You can see they pushed it really hard, way up to 40, and then giant volume spike. That was it right there. That was the climax spike. When you fail to get back above that level on the bounce, look how the volume's lighter. That's a signal that it's breaking down. Okay, so what we're watching now is EMA4 at 36.20. It did close right above that level. What we're looking for is a close below that level for our signal that yes, now it's going to consolidate. Now it's ready to head lower. As long as it's holding EMA4, it's still super bullish. I mean, natural gas is in a very strong long uptrend on the daily chart, okay, and the trend is your friend, the best things to do is to follow the trend. A lot of people have been catching the falling knife on DGAZ. I'm going to get to that in a minute. And so everybody's trying to play the DGAZ bounce, which is going to turn out to be a very good play once it all happens. But you know, the trend is your friend, and natural gas has been holding on to this bullish uptrend. Keep in mind, as long as the middle Bollinger Band at 31 is holding, the uptrend is still intact. For the DGAZ play that's coming up here that I'm going to talk about, that's just a technical bounce play. You want to stick with the trend. The trend is your friend until it breaks down. And the first way it's going to break down is by turning the EMA 4 at 36.20 into resistance. So keep that in mind. We're watching that level closely next week. Now on the 15-minute chart, you could see the lower highs. There was a high here, and then you've got the lower high, and so now it has the descending resistance. As long as it fails to break above this red line here, you know, it's going to keep heading lower. And so it's coming to a flex point. Yeah, we could draw in a trend line here, and you can see it has a symmetrical triangle kind of pattern going on here, and so right now it's back below the green and gold lines and below the dotted purple line. You can see that's the 50, the 100, and 20 simple moving averages, and trading below that, that was a sell signal. Okay, that was a signal that the chart's breaking down. It's becoming a risk to stay long on UNG right here, because there is risk that it could pull back, and if these levels remain resistance and it fails to get above 36.50 here, get back above this 36.50 resistance zone, back above 36.75, then what you're going to see is a drop down to the red line. It's currently the 200 simple moving average at 35.61. You know, once 36 breaks, 36 support, then you've got this 35.61 level. It's going to need to hold that, or otherwise, you know, that's where you could, you know, get the big drop down to the 300 simple moving average, and that's where DGAZ and, you know, puts, UNG puts would really come to play. Right now, it's been, you know, the call options for UNG and for you have been the way to go. I didn't put in Boyle and cold in this one, but you know, Boyle has call options have been doing good, and then now what's coming up is cold is going to become in play, and DGAZ once it finally breaks down. If you look at a lot of people are trading UGAZ. It doesn't trade options, but they're trading this as the 3 times you know, UNG. It moves 3 times the movement of UNG, and so, or at least it's supposed to. And what we have here is breaking down. Okay, so it closed below EMA 4 for 2 days in a row. So notice how the pink line is turning into resistance. It traded above that level intraday and it closed below. So as long as 159.56 is resistance, it could consolidate. And so what we're looking for is EMA 13 right here. That's going to need to hold. If you see it break below 145.90, that's where you're going to get that big drop again back down to that middle Bollinger Band at 125.50, the way it did back here on the 15th. And so this is possibly breaking down. Now, if it gets back above EMA 4 at 159.56, it could head higher. It's right in a flex point right now between the EMA 4 and the EMA 8, you know, the lime and pink lines. If those levels both turn into resistance, if you start seeing it trade below 155 next week, that's going to be your signal, okay, UGAZ is finally consolidating. You know, DGAZ is going to be in play. Look at the declining volume pattern. You know, volume is starting to fade here. It was a holiday week, so that it was less volume this last week. So next week we're going to really be able to see what's happening. You can see it's making the lower highs. Okay, so it has that same kind of pattern of lower highs. It has to break above this 172.50 resistance zone. If it fails to get above 172.50, and then as you can see here, now it's below all these moving averages. It closed bearish on Friday. It made you guys a risk to hold over the weekend because it's turning all these levels into resistance. It has to get back above 165. If you see you guys trading below 165, that's going to signal downside risk. And our next target's going to be the blue line, which is the 300 simple moving average at 148.66. Okay, yeah, if you look here, when it came down on the 20th and it hit the blue line, that's where it found support, the 300 simple moving average, and so it's likely to come back down and test that level. If that were to break, that's where it could get really bearish, test this 135, 400 simple moving average, and 132 low close from the 20th. Okay, now so DGAZ. This is what a lot of people are more interested in right now, is DGAZ and the bounce. Okay, so it's very bearish here on our side. It's at 23. You know, it goes without saying. This is extreme oversold. This thing has been brutalized, right? It's just been in a very bearish downtrend for a very long time, and it fails to get moving. It has consolidated in the support zone. You can see all these candles are all in the same trading range. What we're looking for next week is a close above the pink line, EMA 4 at 306. Notice the last close above that level. I think you have to go back here. You know, so it's like back here in October, before, right when it was above the middle Bollinger Band and before it broke down. That was the last time it closed above the pink line, above EMA 4. Once it closes above that level, then it'll be in play. That's when you want to play DGAZ. That's when it'll be safer to be able to jump in here. It's going to be still super risky because it's a dead cat bounce play, and dead cat bounce plays are the riskiest trades to make. But if you want to take a stab at DGAZ, have some patience and just wait for that break above EMA 4. That way, okay, number one, your capital's not tied up. If you loaded down here, you know, you've been going sideways and just worrying that you know, is it going to break resistance, you know, because it could drop lower. And then also, you know, you're not able to use those funds for other trades. So just have some patience. Wait for that break above EMA 4. That will be your clue. Okay, it's finally ready to go. If you look here at the DGAZ EMA 4 and 8 and Bollinger Band chart, you can see clearly it's in a downtrend here. And once it gets above that pink line, 306, that's going to be where we're going to see a run, possibly up to EMA 8 at 416. I would rather trade between 306 and 416 and not have to get this lower entry point, because I feel like the lower entry point isn't worth the risk. It's safer to wait for the break above resistance and then just make the trade between the moving averages. If it breaks above that EMA 8 level, we could get possibly a run up here to the top or the bottom of the gap, which is at $5, and then you have the top of the gap up there around 625. And so that's the upward target. A break above EMA 4 could get a run all the way up to $5. The bottom of the gap's always tough to break. There's no reason to load before then. You're just taking on too much risk, in my opinion. These are all just my opinions, and so you could just, you know, take them for what they're worth. I'm just trying to help, and yeah, just sharing my own theories, which I'm not saying are the correct ones. I'm just saying this is my strategy, and yeah, I'm just trying to share it with you. And yeah, if you look here at the 15-minute chart here for DGAZ, what we're looking for is this gold line here to turn into support. It had been working on turning these levels into support into the close. Notice how it's trying to get above the moving averages when UGAZ was below the moving averages. So what's the 100 simple moving average at 281 turns into support? That's when it can head higher. It closed above that level at 285. So it's above that level. It was in play on Friday, okay, on the 15-minute chart, but being below EMA 4 still makes it a risk to hold overnight. It's a risk to hold anything overnight long in a long position if it's closing below EMA 4 on the daily chart. Now that said, it's heating up on the 15-minute chart. So if it trades above 281 on Monday, it's going to be in play for a bullish move. We were looking for a break above the high close resistance level right here. And then, yeah, you can see here there's a little gap right here. Okay, so you'd be looking for the gap fill, and then eventually a run up to that 200 simple moving average at 380. Okay, let's take a look at oil here. Oil is down 6%. It's been just totally crushed. RSI's at extreme oversold levels. Fasto's at extreme oversold levels. You can see here how it can stay below the oversold level, the 30 and 20 levels, for an extended period of time. You know, this is just a really nasty downtrend. USO puts have been major money makers. You know, trying to play calls on the bounce have been brutal, because you can see here on the 19th it looked like it was heating up, and the next day they dropped the floor. And so the bottom line is the trend is your friend. So if you've been sticking with puts during this pullback, it has been paying off. You know, it's paid off to stay bearish on oil until it signals that it wants to bounce. It keeps trying to bounce. I mean, this is a bullish reversal pattern. You know, that's bullish Haremy cross. That's bullish homing pigeon. It keeps forming these bullish patterns, but it's failing to confirm them. You know, I guess this did start to confirm it, but yeah, it's just the bottom line is it's just the bears are still super strong. And so what needs to happen is it has to get above EMA 4 once again at 1131. As long as that's resistance, it's going to keep heading lower. It's closed above that level a couple of times here on the 19th of November and then back here in October, but the level keeps failing to hold and it keeps dropping lower. And so there will not be a sustained bounce until EMA 4 holds and it gets above EMA 8 at 1170. Once you see USO above EMA 8 with a close above, that should be our bullish change in trend. it hasn't had a close above that level the entire time during the drop. And so we're looking for something different here. We're looking for a signal, a clue that, okay, yeah, it's actually really going to bounce. Okay, it didn't quite get that doji candle on Friday. They were still pressing really hard. If we look here at the weekly chart, okay, this is interesting for USO. You can see now it's below 30 on RSI. Now USO finally closed at oversold levels on the weekly chart. So this is where it could start getting interesting for the technical bounce, okay? Because now it's below 30 on RSI. They've really pushed it down. And so now we're in that zone where they should be, technical bounce players should start nibbling down here. Okay, we have Fasto at 2.52. This is an extreme oversold level. Look at all the red candles in a row. So they've just pushed it down for 7 weeks in a row here. And last week's close was very bearish. We were looking for this 1125 support zone to possibly hold. Just to always keep it, we're looking at support levels. We're not hoping for anything. We're just following the charts. And whatever the charts say, we just stick with the trade. We could care less if this goes up or down. We just want to be on the right side of the trade. And 1125 was a support zone that it could possibly bounce off of. It didn't hold. And so that signals more downside risk. Okay, that was the high close here. That was big support from back here in 2017. 1125 now is going to be the big level to break. Fail to break that level, it could keep pushing lower. There was a close below the lower Bollinger Band and below EMA 4 and the 100-day simple moving average up here. It has to get back above 12. Trading below 12 is going to signal that USO is going to keep pushing lower. If it can get back above 12, that's where it could get a bounce going. Right now, you're looking for a possible bounce off this 1040, 1050 support zone. Okay, and that was a previous level back here. It's very bearish right now, and any kind of short cover rally could be a bounce just back up to EMA 4. So keep that in mind. If it does bounce, EMA 4 is the sell zone on the weekly chart until resistance finally breaks with the close above, and then that would signal to keep riding the bounce longer. If you look here at the volume spikes, it looked like 2 weeks ago with that lower wick and holding the 100-week moving average that it was going to possibly bounce with that 200 nearly and 50 million in shares. It was a huge week 2 weeks ago, and then even last week, it was a shortened trading week, and volume was really light across the market. But look how oil had big volume. That's with only 4 days of trading. So we're talking about huge volume the last couple of weeks, especially when there's been lighter volume with the stock market. And so many times you'll see heavy volume at the bottom where people are loading. But right now we need to see that. We need to see that setup where USO is finding support and traders are looking to buy. If you follow the 15-minute chart, it was heating up on the 21st. It had got above the middle Bollinger Band here and above the 50 simple moving average, the dotted purple and the green lines, and it looked like it was ready to go, but it hit the gold line, the 100 simple moving average, and failed to break, and it pulled back. And so that, failing to break that level, that was the lock and gain zone. Okay, so the moving averages become the sell zones if resistance fails to break. If you didn't get out, playing the bounce right now is deadly. You just really have to let the chart set up, or you have to be very quick on trading, or else you could get stuck holding the bag. Lots of gap down opens, and so now again, it's just going to be about you have to get above the middle Bollinger Band at basically at $11 here, and turn 11 into support to get back above the 50 simple moving average at 1130. Once these two levels turn into support, that's where it can try to get a bounce going, like it did on the 21st. But if you see it breaking down and you're playing the bounce, you have to be really diligent and exit, because this is a big risk to hold right now if you're in a long position. We need a clear picture that it's bouncing and trying to get a reversal going before you get too bullish on oil. But after the big pullback and the big drop here, it's going to be set up for a nice technical dead cat bounce. So yeah, you're not going to want to miss out on this dead cat bounce play. Like I said, put options have been major money makers, so congrats to everybody that's been trading options. And then pretty soon there's going to be a nice trade coming up with call options on a technical bounce. Okay, yeah, if you'd like to learn more about all this, please come check out the premium chat. All right, thank you.